Economist with me and Shawn DuBravac. Shawn, how's your week been?
It's good. It is good. It's definitely a lot of news happening here in the US for sure.
Yeah, it's fast moving at the moment, isn't it? Let's start a little bit with the data that comes out from IPC every month. Where are we looking? Anecdotally, the people still seem to be in a bit of a trough in terms of demand. Forward looking, they seem to be more positive than they were maybe a couple of months ago. What are the numbers telling you?
I think you summed it up nicely. I think there are a couple of narratives playing out in the broader economy, and I think you see those ultimately also playing out in the IPC data. If you
Mm,
look at book to bill for North American PCB or for North American EMS, both are down. Uh, PCB is notably below the 100 threshold that we tend to think about, where you've got good order flow supporting shipments. Uh, but if you look at the history of the EMS series, it is getting to a low point.
mm,
Whether that will actually go below 100, I think it does speak to weakness in the
yeah,
category, and so
yeah,
you really see it across the board. And that to me is a story of what's playing out in the broader economy. You have a slowing, but you've already had that slowing happen in the physical part of the economy. So really what's holding up the economy is the service sectors. The demand for goods has already been weak. We're already seeing, prices decay on a year-over-year basis for goods broadly. So like that inflationary story is long past now. It's really the inflationary story is still on the service side of the economy. And so there's weakness broadly happening in the economy, but more specifically, it's been playing out in the goods sector. And I think that's what you really see in the book to bill numbers. If you look at sentiment numbers, they're a little improved compared to last month, but we saw a series of months, several months in a row where things were getting weaker. And I think there's just a lot of unease right now in the
mm,
sector and also in the broader economy. You certainly saw the financial markets this week react to relatively weak manufacturing sentiment data. But I would argue if you're paying attention to manufacturing sector at all, it's been weak and it's been uneven. And so I think the financial markets are just jumpy right now. They're looking
yeah.
for information in any bit of news, and you see that with the VIX at high levels. So a lot of uncertainty and unease, I think, happening right now.
Yeah, and what about what about interest rates? What about the indication from the Fed that interest rates should be cut? How do you see that affecting the sector? Do you think that'll push people back towards some more capital investment again?
I think there is money sitting on the sidelines still waiting for not even necessarily rate cuts, but just waiting for better clarity on the state of the economy.
Hmm.
So with the Fed's first rate cut this month, and I think there's still some debate of whether it's 25 basis points or 50 basis points, regardless of that fact, you'll get your first rate cut, and that's a clear signal to the market that we're now in the part of the cycle where rates will be declining, not increasing. And so I think that will provide some some cushion for businesses that are looking to invest. I think what is really going to keep them on the sidelines will be any indications that the slowdown is anything faster than manageable. So if there's
Yeah.
any sense that the consumer has slowed down quickly, that businesses are slowing down quickly, that there's a deeper downturn in Europe or a notable downturn in the U.S. more than just a slowdown and a what we'll call a soft landing,
Yeah.
um, then I think the money stays on the sidelines and companies resist the urge to invest. But I do think that there is a desire to invest, and especially if they feel like we're at a turning point where we're going to be slow and things will pick up eventually, they want to get those investments in now. As we see in some places, you look at semiconductors, for example. I mean, that's a a very long cycle. Those investments are still years away from coming online. And so any company looking to build a new factory, new facility, will be, they're looking at an investment cycle that's going to be multiple years. So the kind of
Yeah.
the current economic environment is less impactful, and those interest rates will be more meaningful to them.
Yeah, and I think once there have been, more than one interest rate drop, then it makes a big difference, and people can see a more favorable trend there, and I think they can see what's going on and perhaps getting back towards growth, and then they can make those investments. But it certainly felt at the beginning of the year that the companies that were not investing in expansion of their business were investing in operational excellence and investing in efficiency. So those kind of investments that take time to do, and you need a bit of breathing space to do, seem to be ones that have kind of won the day, whereas those large capital investments like new lines and things have perhaps been slowed down and delayed somewhat. So I think there's a difference there in the way people look at those capital investments. You mentioned the semiconductor industry. We saw news in the last couple of weeks of several semiconductor projects from TSMC, from Intel, from Samsung that are in the US that are delayed for various different reasons. These are long-term projects, so a delay maybe has an impact further down the line. But it seems relevant that people are maybe slowing on those investments or changing course a little bit. What do you see as the underlying trend there?
I think the long-term trend is still intact, and as you noted, these are long investments. The
Mm.
Ohio Intel fab isn't set to go online until 2025. So even there, you've gotten some indication that there's a delay. It's not clear yet how long that delay might be. Are we talking, late 2025, 2026? Or are we talking 2030? Those
Mm.
very different scenarios. But I think that the long-term intentions are still there. They're still intact. Um, I do think that that feeling of necessity has waned a little bit as the economy is slowing, and more importantly, again, as the demand for goods has slowed, the willingness to invest in goods manufacturing,
Mm.
I think will slow. So I don't think that there's quite the urgency. At the same time, there are a lot of incentives in
Yeah.
place and in play that I think there is a sense of urgency around those to be able to take advantage of those incentives and put that to work. And I think what's interesting is you just get different indications of why there is a slowdown. If you look at Arizona, for example, with TSMC, it's a sense that maybe there's some labor constraints there.
Yeah. Yeah.
Maybe as the economy slows down, that will improve somewhat. The Intel investment in Ohio is the biggest single investment that the state of Ohio has ever seen, and so there's probably a number of roadblocks that are there, and obviously they're much earlier in the process there than TSMC is with Arizona. Um, TSMC, I think, has long-term plans for Arizona, and I think they will proceed with those, but perhaps at a slightly slower pace than they had originally indicated.
Yeah. Yeah. And, it's really interesting when you look at the reason these incentives have been put in the US. It's to make a more robust supply chain. It's to build up more parts of the supply chain, starting at the semiconductor. And the semiconductor seems to have become a big political pawn in terms of the relationship between the US and China. And in this trend, maybe swinging the manufacturing pendulum away from globalization more to regionalization. We heard this week that there are issues with respect to rare earth materials that China mines the majority of and controls the majority of, that are used in semiconductors. The US is already restricting which semiconductors China can have in terms of enabling AI development and those kind of things. Um, so decoupling from a global supply chain with this interdependence is really, really challenging, isn't it? And when you look at, you can't have the rare earth materials unless you give us the semiconductors. It becomes a very complicated negotiation.
Yeah, and I think you've seen China make investments in recent years in some of the minerals and chemicals and rare earths that will be needed. And in some cases, it even looks like they've been building their stock in some of those materials. And so I do think that this will be an ongoing conversation, negotiation. I think it's also clearly an indication that China is suffering for growth. They are looking for
Mhm.
growth in any way that they can get it. They're clearly trying to bolster the manufacturing base, but I think they're also looking at investments outside of
Mm.
China. We've seen those continue to grow. You just saw this week that they ended formally international adoptions. So, there was a time in the 90s where they were promoting international adoptions because they were trying to control population growth. Now, as population growth has slowed, they're
Yeah,
no longer looking to slow domestic population growth. And if anything, they're trying to stimulate
yeah.
domestic consumption so that they can put some of this manufactured goods into to place when it's not just being exported but can be consumed domestically. So I think there's a lot of headwinds for China, and they're looking for growth in any place that they can find it.
Yeah, and I think one of the interesting things that came from that came out this week, there was a release came out from VW with concerns about their sales over the next couple of years, and I think Chinese competition in that area is obviously something there. Many of the European and US traditional car manufacturers are concerned about. They really seem to have ramped up their EV capability. I think BYD has surpassed Tesla in terms of number of cars being shipped. They're also supplying Tesla with batteries. Their position in the automotive market is really rising and is becoming more significant. Do you think that's a strategy to be, kind of less of a contract manufacturer and more of a finished goods manufacturer because there's better margin, maybe there's better growth potential, but conversely, there's more risk of people slapping tariffs on and trying to stop that.
I think China has for a very long time tried to move up the value chain and
Mm.
to control more of the intellectual property in any given category. And you go back to, the DVD wars where they were creating their own homegrown standards
Yeah,
20 plus years ago. Like they want to uh have a bigger share of the value add of a product, and I don't think that's unreasonable. I think every company wants to do that. Every country wants to have a
yeah,
higher share of the value add of a given category. I do think though you've seen already places like Canada, Europe impose tariffs on them. The US is clearly pushing them.
yeah,
And so you've got a lot of apprehension about low priced Chinese EVs coming into the marketplace. And part of what's allowed them to do this, not only their manufacturing base, but they've had strong demand domestically. And so
yeah,
they've been able to ramp up perhaps more quickly than in other markets. So they've already had strong uptake in EV. Obviously, it's a much bigger market than some markets, so that they still have a long way to go. But I do
yeah.
think that they're ramping up domestic demand for EVs, and so then kind of the natural push was to move into some of these other markets where they could be a low cost provider. And so I think that will continue. I just think it'll be harder in some of these markets that have strong auto sectors themselves, the
Mm.
US, Canada, Europe. Um, it'll be something to watch for sure.
Yeah, and as we've seen that EV growth in China, and as you say, supporting the domestic market, there are numerous brands that in the West we haven't even heard of. And, I've talked to friends that are senior within Chinese EMS factories, and they're telling me, middle management are buying cars for $7,000 or whatever, and they seem like really good cars, but there are logos on the front that they've never seen before or never heard of. So. Yeah, I think it's interesting. Um, I think there obviously is, because of those tariffs, there's a whole political element to that. We haven't really seen, with respect to the US election, where people stand on manufacturing. I think next week, hopefully, we've got the debate. Terms seem to have been just about settled. And hopefully over the next month, we'll get a little bit more information from both parties on where they see manufacturing. But clearly manufacturing jobs, whether that be within the electronics industry or automotive or other sectors, is going to be an important part of the election, and it plays quite strongly, or it plays very strongly in the swing states too.
Yeah, and I don't think from either candidate you're going to get, any note. I don't think you're going to, frankly, see much of a notable difference from them. But certainly, you're not
Mm.
going to get a change in regime from either of them. If Kamala Harris were to win, she will continue what the current administration has done, and frankly, the current administration has continued what President Trump did when he was in office. And so,
Yeah,
they're both, I think, debating how strongly they'll oppose China, entering into certain markets. I mean, you saw President Biden and both Kamala Harris announce their stand on the U.S. steel acquisition. So
yeah,
it
yeah.
it, it
And that's
isn't just
Japan. Yeah,
electronics. It's
not just
um,
electronics, and it's not just China.
yeah, yeah.
Yeah,
So I think you'll I would be very surprised to see anything change with the tariffs. And if you look at, in our most recent, and IPC's most recent sentiment survey, one of the questions we asked uniquely this month was about manufacturers' concerns over geopolitical risk and also their concerns over, trade and tariffs. And you saw a significant share of executives, north of 40% for both of those, say that they were concerned about geopolitical risks, and they were also concerned about, where t trade tariffs were going to go. And so,
yeah,
I do think to be successful, we will need to find a common ground, a middle ground, perhaps, where we do allow global supply chains to operate, and at the same time, everyone can win in that. So
yeah.
I think we haven't settled on what that looks like, but I do think that's where we need to move towards.
Yeah, no, it makes sense, doesn't it? You look at, the pendulum swing from globalized to regionalized. It needs to settle somewhere that's practical and pragmatic. And there are certain parts of the supply chain where dependence on single regions has existed for a long time and takes a long time to unravel and to change. So I think we need to work within those constraints as well. And tariffs need to be, like incentives and like restrictions, they need to be used pragmatically and sensibly, because if it's just, you place a tariff on us, we place a tariff on you, it becomes, the tariffs become the bigger part of the industry, and the bit that is stealing everybody's margin. So it doesn't make sense.
Well, and as you know, companies will move their production to different parts of the world based upon those tariffs,
Mm.
and so it goes against what we're trying to do, which is create more resilient supply chains. If we
Yeah,
create supply chains where companies are zigging and zagging across country borders in order to
yeah,
minimize tariffs, then they've actually made their supply chains more fragile. And I think that's what the pandemic really revealed, was that we had made these supply chains in some instances much longer than
yeah,
we realized. I also think that, as you know, that a lot of this just takes a long time. Like, it's
yeah,
easy to say this is what we should do, but then when you talk to any EMS company, they'll say, "Well, look, we've been trying to find another source for this component, and we can't get one that's validated with this product we're building. We've been looking for over a year, so it's just hard. I mean, the idea to
yeah,
have things double and triple sourced is
yeah,
certainly a good goal, but in practicality, it
yeah,
can be very, very difficult to do that for any number of reasons.
yeah. And as you say, the goal is to have practical, shorter, more robust, more sustainable supply chains. And I think if everybody keeps their eyes on that rather than being either too globalist or too nationalist, then hopefully we'll achieve the right result. Thanks so much for your time again, Shawn. I hope next week's presidential debate will give us some insight. But as you say, I think they both care about manufacturing, and manufacturing jobs are important on both sides. But I imagine over the next month we'll get some more news on that side of things, and maybe we'll take a dive into that next time we meet. Thanks very much.